So we are told us very fast. What have they told us? What have they told us? They've told us, ladies and gentlemen, this is a very easy question. I'll be able to get all the marks without even balancing the question. All the marks, there are very many free of charge marks there. So without even balancing, I'll get all those marks. And there are how many? All those marks, I shall be able to get them. There are 20 marks. I'll get all the 20 marks. Any 10 ticks which are correct, any 10 ticks, each at 2. Any 10 ticks that are correct, each at 2. Each at 2. So consolidated statement of cash flows for Eurogroup for the year ended 30th September 2021 using the indirect method in accordance with IAS Tier 7 statement of cash flows. So once they tell me like that, ladies and gentlemen, what I'll do, I will come and remember our 3 activities, our 3 sources of cash flows. So we start straight away with our operating activities. We shall start with our operating activities. Remember there are 3, Cash flow from operating activities. So here we start with the profit before tax always. Which you shall come under adjust. And when you're adjusting, of course, in this case, remember, I know you know the acronym. Normally talk of dial, God's number for food. Dial God's number for food. Or in this case, here you do what here? You rest in peace. Or you rest in peace. So have you been able to write up to there? Have you guys been able to write up to there? It's any 10 that I write, any 10 ticks that are correct. I have my 20 marks and I'll be able to show you how you get those 10 ticks very easy. So in this case, we start with the first one is depreciation. We have impairment of goodwill or any asset that are given there. We have amortization of intangible assets. We have loss on disposal of any assets or subsidiaries because this is group cash flow. We have gain on disposal. When we dispose, for example, an investment like a subsidiary, are we going to gain? Then we have what we call the finance cost. We have receivables. We have in this case here inventory, and then lastly we have payables. There. So remember, here we have a title called working capital changes. If you wish, and leave it out. Working capital changes. It's good to just have it there. Is it mandatory? It's not mandatory. So the first mark that will be able to really assist me is this profit before tax. Profit before tax, is there somebody who can hold the income statement and they're able to see profit before tax? Anybody who can hold the income statement and they're able to see the profit before taxation? Before taxation, yes. Before taxation. Profit before taxation, are you able to see profit before taxation? 2350, isn't it? So 2350, that's a straightforward value. 2350. From there, ladies and gentlemen, I will straight away go to depreciation. Depreciation has been provided, will always be provided. You're told here in note number 3. From note number 3, depreciation charged during the year ended 30th September 2021 amounted to 1240. So depreciation is 1240. So depreciation here 1240. Depreciation is 1240. Another free mark will always be there. One of what here? Finance cost. We have here finance cost. Are you able to see the finance cost, ladies and gentlemen? Finance cost, is anybody who is able to see the finance cost? These guys are not talking to me this morning. I don't know whether it's because it's quite raining in their place. The finance cost from the income statement. From the income statement, the finance cost is 800 what year? 35. The finance cost is 835. The finance cost is 835. Ladies and gentlemen, from there, I will even skip without, this is a very easy question. I'll skip straight away. I go to working capital changes. I'll go to working capital changes. They're saying it is 260. I don't know how I picked 835, but where did I get 835 from? Where did I get 835 from? Finance cost 835. That's share of profit of associates. Finance cost is 260. Thank you very much. Finance cost is 260. Like that. Finance cost is 260. Now, after I finish finance cost, I would want you to listen and listen to me very well. Listen and listen to me very well. After I finish this finance cost, what I will do, I'll go and place my fingers where I'm seeing profit before tax. So we have in the income statement, I'll be able to pick a few marks there for free. In the income statement, I'm able to see what they're calling PBT. PBT, I can see profit before tax is 2350. And then what I'll do, using my fingers here, I'll be able to run up and identify any non-operational activities. I just go up. It's called up. Just go up and identify any non-operational activities. So when I go up, ladies and gentlemen, non-operational, as the parent there, profit before tax, I can see finance cost is non-operational. Of course, I've been able to capture it here. Finance cost is non-operational, been able to capture it there. And then when I go up, I can see share of profit of associate. I'm not here really to look at the associates, no. My operations, for example, if it's RSM Online College, I'm selling courses. If I have a subsidiary, then that subsidiary or even an associate, that one belongs to my investment activities, my investing activities. It's not out of my operations. When I earn a profit out of my associate, that is because I did an honorable thing of investing. It's not my operations to run my investments. So then, ladies and gentlemen, what I need to do there, I can see in an operation, that's a free mark. I can see a non-operational income, share of profit of associate. So I believe you guys must have left some space here. Me, I'm very lucky because I know this question does not have any loss on disposal. So I can wrap this and write here, share of associates profit. It's non-operational associate profit. How much is it? So I look at it very well. I can see it is 1540 or what. You guys have to assist me. You guys have to assist me because it seems I also can't see very well in the morning. 835, yes, it's 835. So it is 835. And this 835, when I bring it here, should I add or subtract? Because I'm correcting errors basically here. Remember, it was added. When they were getting this figure, they added it. And because I'm correcting errors, we subtract. Yes. Oh, you guys, had you done this question? Perhaps I'm even wasting your time. Had you done this question from any of my videos? Okay, then we can continue with it. Okay, so 835, great. Then again, run through, just continue going through up there. So after profit before tax, I'm still trying to look at those. So I have share of operating expenses. That is an operating thing. Gross profit is operating thing. Cost of sales is operating. Revenue is operating. Remember, ladies and gentlemen, basically when we talk of operational profit, profit is revenue minus what your cost of sales. Revenue minus cost of sales. This is the operational profit. Any other thing, ladies and gentlemen, will be non-operational. So when I get this, of course, I'll be able to get my gross profit, etc. So revenue is operational, cost of sales is operational. Just to make myself clear, when I look at this, I have revenue, I have cost of sales. That's operational. And then I have the third thing, which is operational. It's the operating what you expect, expenses. Any other thing will be non-operational. So, ladies and gentlemen, by doing this, I've gotten so many marks. Not many Kenyans will be able to get this kind of what here, this kind of values. Now from there, let's keep straight away, go to receivables. Receivables, remember the way I taught you in that video that I asked you guys to watch, it's very easy. You only look at the changes. Changes means that you're subtracting. Changes means that you are subtracting. Opening minus closing. So for receivables, we have opening minus closing, opening minus closing. So are you able to see the opening? Are you able to see the opening? Are you able to see the opening? Are you able to see the opening receivables? Is there somebody who can see the opening receivables? Opening receivables. Is there anybody who is able to see the opening receivables? Opening receivables. They're not talking to me. Opening, it's for the first year given there. For the first year given there, receivables. When I look at the balance sheet given, 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 I have, ladies and gentlemen, my receivables, opening, opening receivables, what do I have there? I can see it is because it is for 2020. It's 1860 minus, in this case here, closing, which is what year? 1950, minus closing, which is 1950. And then during the year, I acquired a new subsidiary. So najiuliza kama subsidiary, huyu mama nilioye mwaka alikuja na mtoto. Watoto ni wazuri, wanaogopa mtoto. So we acquired a subsidiary in this year. Note number one, we acquired a subsidiary. And if you look at the last sentence, of this note one, additional information one, we are told the market value of the parent entity share was 16 at the time of the acquisition. Sporty Limited's net assets at acquisition had the following fair values. Amongst the fair values that we have there, one of them belongs to trade receivables. Trade receivables of 480. So I brought in the subsidiary and it came in with its receivables. So I have to come and add here. So we have here 580. That's that. So this is for the subsidiary we are writing, which was acquired in the year. What if you're told that a subsidiary with those assets was disposed? If it was a disposal, what would I write down? You subtract. It's very easy. You subtract. It's very easy to subtract. So please give us the answer here. So receivable, what figure do we have here? Somebody that I should write here. Receivable, what figure do I have here that I should write? So I'm being given a figure of 490, and I believe it's positive, right? So if it's positive, you simply leave it like that. 490, you leave it like that. Go to inventory and give me a figure. Hey, you guys, go to inventory, give me the final figure to write. Go to inventory and give me the final figure to write. Inventory. Now go to inventories. Give me the final figure to write for inventory. Remember, it is rest in peace. So for inventory, so I'll have to come and write here. Space is not very nice. For inventory. So for inventory, again, remember it's opening minus closing, but I would want to see opening minus closing. If there is any subsidiary added, you acquired subsidiary you add. And in this case here, you subtract, in this case here, any subsidiary disposed, subtract the figures. So for inventory, opening inventory, the opening inventory that we are seeing there, if you look at this thing very well, the opening inventory, I can see 2060 minus the closing inventory, 1575, in this case here, plus inventory that came with this subsidiary. The subsidiary came with some inventory there of 640. So are you able to give me this figure, ladies and gentlemen? The final figure, what do we have there for inventory? 1125. So I'm being given a figure of 1125. From there, 1125 is correct. 1125 is correct. So go to payables. I would want to see how you're making arguments for the payable. Go to the payable. I would want to see how you're making arguments for the payable. I would want to see how you're making arguments for the payable. Give me an answer very fast. I have to involve you. If you give me an answer very fast, I have to involve you. So Rabonik is giving me 125 negative. Is that the case? Rabonik is giving me 125 negative. That's on Rabonik. Other students chip in and give me an answer. Chip in and give me an answer. 125 negative. Actually has confirmed. Actually, but remember that payable, let me just check the answer. Let me check the answer and see whether you guys are really cracking it. Or are you just jokers who intend to plant trees today? It's 125 negative, yes. No, Mukua. It's 125 negative. So payable, it is opening minus closing, and because this is a liability, we shall do what? We shall multiply with -1 because it's a liability. It's a liability. And of course, if there are any additional subsidiaries, we add. So what do we have here for payable? For payable, what do we have here for payable? So for payable, what do we have here, ladies and gentlemen, for payable? I can see the payable opening. The payable opening, where is this thing now? The payable opening, yes, I can see it's 2460, 2460 minus the closing, 2460 minus the closing, 2685, and there was a payable that came with this thing. There's a payable which came with this good thing here called subsidiary. There is a payable there, a payable of how much? A payable of how much? A payable of 350. A payable of 350. A payable of 350 times, in this case, a -1 times -1. Can you confirm this answer, ladies and gentlemen? Can you confirm this answer? I know the mistake that so many guys always enter into here. I'll explain. I will explain. Because this figure here is negative, so many guys will bring it as a negative here. No. Remember, ideally, all these other figures, even the balance sheet, they're supposed to be negatives because they are what here? Because they are liabilities. Because they are liabilities. So in this case, this is supposed to be -125. -125 is the one. -125 is the correct figure. -125 is the correct figure. -125 is the correct figure. Is that okay? So remember, when you use this approach of mine, ladies and gentlemen, you don't start making arguments that payable has increased. Now it's a cash inflow or a cash. No. You simply use this concept of opening minus closing because you don't have the time really in an exam. And trust you me, the way we mark, once you reach here, you are almost you are almost done with this question. I'll do very few things after this. And then I jump onto another question, and then I get a pass. And then later on, I'll be telling my friends how I knew AFR, that I was an expert in AFR, and you just passed because of what here? Many entries. Yeah, you just passed because of many what here? Entries that you used. Yes, many entries that you used. Yeah. Great. So can I wrap this? Because for me, and I'll tell you, I'll tell you that this is a person who won financial accounting for best student during my time. Right? I will not be able to add anything. I'll not even come to get the total. I'll not do that at all because I don't have luxury of time in an exam. It's about time management. Now, ladies and gentlemen, after that, then what I'll do, I'll come and look at investment activities. Investment activities are always, if there is an associate, I'll always look at the money that I received from my associate by having invested in it. These are third party. Go ahead there. So now we are looking at investing activities. Investing activities. So investing activities, you look at the non-current assets and don't go for very many of them. Non-current assets, non-current assets, non-current assets. Don't go for very, very many of them. Only two or three items. So look at the non-current assets. We have property, plant, and equipment, and then we have investment in associate. I will always begin with that investment in associate because it's a free of charge thing. I've invested in an associate, so I expect to get dividends from associate. So dividends from associate. Dividends from associate. Not many students are able to compute this thing, and it is normally the easiest. I would want to give you 1 minute to give me this dividend. How much dividend did I receive? How much dividend that is? It's the opening minus closing. Look at the associate given. Look at the associate given. Everybody is able to give me, like Ingu tells me 675. 675. You guys are geniuses. 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 Nitahitaji kuachana tu masikio kidogo tu na mmekamata. Nitahitaji kuachana masikio kidogo tu na mmekamata. Because you can see in this case here, the opening there, or if you look at the balance sheet given, investment in associate is 1,800. Investment in associate is 1,800. I hope that is opening. Opening. No, that's Goodwill. It's 3,250. It's 3,250. It's 3,250. And then I say minus, we have here 3,925. So remember, this is these are what are the changes. Beginning of the year, end of the year. But remember, between the year, things happened. We got some profit out of this thing. We got some profit. Are you able to see the share of the parents, the share of the investors' profit from this associate? Look at the income statement. What did you book there? What did you book there? What did you book there? There is an investment. There is a share of profit from the associate, 835. It's profit increased. These changes here. So plus 825. So that's the only thing you missed. That is the only thing you missed. That is the only thing you missed. Imagine. I told you guys I'm right. Please never forget this. You take opening minus closing plus PAT of the associate. Just that, and then you'll be able to get the dividend from the associate. Just that. How much should I book in here? How much should I book in here? I don't know how they're getting that. It's 160, yes. It's 160. Please use your calculator nicely. Say 3,250 minus 3,925, and then you say plus 825. Please ensure that you're able to get that 160. Ensure you're able to get that 160. It is 835. Oh, is it? 835. Thank you for that. 835. $160. And then when you use this approach, you're not even worried about this cash. Is it a cash outflow or a cash in? You're never worried about that. You're never worried about that. So equal exam utapata ama utapata, because you know it has to be there. If they will give you a group cash flow question, this always has to be there. This working. Utasahau tena ama utapata hii sasa hii. Ukienda kwa investing, because you umeenda, ukienda kwa investing, utapata. Very good. Very good. It is very easy. Now from there, the other working that so many guys are not able to get, and which is really the easiest. I'm investing in my PPE, property, plant, and equipment. Property, plant, and equipment. So start with opening. Property, plant, and equipment. Start with opening there. Start with opening there. Property, plant, and equipment opening. balance brought down is 8,800 minus closing to get the change 13,400. And then in between there, things will happen. In between there, things will happen. Share of profit over. Veronica, I cannot understand your question now. I cannot understand. Is that a question, Verona? I can't even understand it. Can't understand what you're saying there. But here, perhaps we're asking about this. You take the opening associate minus closing associate plus the profit from the associate. And this profit from the associate is given in the income statement. Profit from the associate is given in the income statement. If you look at the income statement given up there, there is profit from the associate. There is profit from the associate. After operating expense, kuna share of profit of associate 835. Kuna mtu ameuliza, okay, then I believe umeona mali of profit after tax associate imetoka. Okay, great. Great. So PPE, nimeona mtu amesema minus depreciation, lakini mimi sikuambii chochote, sikuambii. Na ngoja nipatie answer. Na ngoja nipatie answer ya PPE. Sikuambii chochote. Na ngoja nipatie answer ya PPE. Ngoja nipatie answer ya PPE. Great, and I like Honorable Nick because he's a risk taker. Even if you don't get it, so what? So what? Even if you don't get it, so what? Even if you don't get it, so what? So you look at what increases the value of your assets. What is reducing the value of your assets? And then don't forget the subsidiary that was bought. It came with some PPE. The subsidiary that was bought came with some PPE. Abraham, are we together really, Abraham? Abraham had really caught up with my speed. But today I'm not seeing Abraham at all. Great. Great. How about Phoebe? Phoebe Arito with a very good name, Arito. Arito is a unique name. Are we together? Great. Then we have this lady with a big name, Biwot. I think I need to talk to Biwot after your exams are over. Are we together, Biwot? Caroline. Yeah, now I like what I'm seeing here because our students are bringing in different answers. That's what I like. Now guys are thinking. Guys are thinking. I can see minus 40-40. I can see minus 40-40. And then, of course, Honorable Nick and his crew gave us a different answer. Yeah, mesh now. Okay, I can see 14-40. Grace, thank you very much. I love students really who are different, who come up with different values. Great. Great. All right. All right. All right. Let me see who is correct because I have the answer here. The correct one should be 45-75. The correct one should be 45-75. The correct one should be 45-75. 45-75. 45-75. The correct one should be 45-75. Let me do it. Let me do it. Let me do it. Let me do it. 45-75. So we have the opening, we have the closing, and then of course we shall come and add any new acquisitions in the year. We less in this case here disposals, and please remember disposals are normally written off at net book value. That is cost minus depreciated amounts, right? We have in this case here any new assets here that came with subsidiary. New assets that came with subsidiary. If there is any disposal of the subsidiary that happened, also you subtract those assets here that went with that subsidiary that was disposed. And then, of course, we know that we have depreciations, which reduce value, so minus depreciations. And at times, an asset can be impaired. At times, an asset can be impaired. Asset can be impaired. All right. So then these we have 8,800 minus 13,400 We know of any new acquisitions in the year. New acquisitions in the year. Have they told us about new acquisitions in the year? If you go to note number 1, if you go to note number, alafu kwa exam, ukisikia gear imeanza kuwa mzito, ukisikia gear imeanza kuwa mzito, please move to something different. Kama hapo mimi najua kuna ameshaanza kusikia gear ni mzito, lakini hii ya PP sio ngumu. Hiyo inaweza cram. Hii sio ngumu, inaweza cram. Because you're looking at, I mean, what is increasing my property, plant and equipment? What is reducing my property, plant and equipment? Just that. Just that. And then go to the PPE note and read it. It's among the first notes there. It's among the first notes there. During the year ended 30th September 2021, Eurogroup acquired an 80%. No, not that one. Not three. Depreciation charge during the year ended 30th September 2021 amounted to 1240. So kwanza unajua depreciation tuanisha 1240. And an impairment loss of 500 what year 35 to Anisha. So minus in this case here impairment loss of 535 to Anisha. All right. The group had a balance on revaluation surplus. It will affect is the way we do it. So goodwill, nothing there. So the only thing that I need to come and check in is this new subsidiary that came during the year. It came with some PPE. I can see some 1800 there, plus 1800. Is there anything I have forgotten? Is there anything I've forgotten, like assets that were here? We never had any disposals, really. We never had any disposals. Never had any disposals, no disposals, no disposals. So I think that is it. That is it. That is it. So in this case here, what do we have? Net figure, minus 45.75. Minus 45.75, right? Minus 45.75. So of course, when it's minus 45.75, it means that money went away, but we acquired. So this is an acquisition. So we acquired new assets. Although we don't make those arguments if you're using this approach. This approach, if it's negative, you simply write it as negative. So to come here to your PPE, write this as minus 45 what year? 75. Minus 45.75. Write this as minus 45.75. Good question there. What about revaluation information given in note? Revaluation also affects PPE, you're right. Revaluation also affects PPE. It affects PPE. Let's see there. Depreciation charged during the year ended 30th September 2021 amounted to 1240 million, and impairment loss of 535 million was recognized on PPE. Prior to the impairment review, the group had a balance on the revaluation surplus of 625, of which 250 million related to property, plant and property impaired in the current year. So this one basically, as I'll be showing on in a different adjustment, these are a little bit different because they simply want us to look at this revaluation amount, revaluation account, which has 625. Out of this, how much should we charge in form of what year? In form of this impairment. So when I come to that particular area of impairment up there, you'll be able to see what I will do under my operating activities. I'll be showing you guys how to capture that impairment very, very, very well. But I can't recognize the revaluation here because that is basically an adjustment of the revaluation account. Now, from there, I'm done with this. I will go to the next one. I'll not even think about, I'll never touch anything there again. I'll never touch anything there again. So I go to the last thing as I start, in this case here, celebrating. Now you start celebrating. You start celebrating. You start celebrating. You start celebrating because you're getting 20 over 20 without even knowing what you're doing. So you go to financing activities. So financing activities, I will leave some lines there. Like how many? Like 5 lines. And then I come and pick these other 3 marks here. I pick these other 3 marks. I pick these other 3 marks. So of course, in this case here, I'll be getting what we call, I'll leave some gap there. Then I'll be getting the total change. Total change. So this total change, what I'll do, I'll simply leave a gap there because total change will be operating plus investing plus what here plus financing. That is the total change. And then I'll come under add cash and the cash equivalents and the cash equivalents brought forward. Free mark. Look at the marking scheme. Add the cash and the cash equivalents brought forward. Is there anybody who is able to see cash and cash equivalents brought forward? Is there a student there from the balance sheet given? From the balance sheet given under current assets, are you able to see the cash and cash equivalents brought forward? Uh-huh. 10 what year? 1085. These guys are not following. So you write here 1085, this is a mark. Then you come and say, in this case, of course, when you add, you have to get what we call cash and the cash equivalents, cash and cash equivalents, cash and cash equivalents, cash and the cash equivalent at the end. How much? Cash and the cash equivalent at the end, how much? Cash and the cash equivalent at the end of how much? 27, 10, 27, 10, 27, 10, like that. Another mark as you sleep. Another mark as you sleep. Another mark as you sleep. Many students will not even reach there. Many guys will not reach there. You're getting free of charge marks. Free of charge marks. Aha. Yes, I was almost getting it wrong there. We have cash and the cash equivalent. Cash and the cash equivalent. Kuna subsidiary ilikuja. Kuna subsidiary ambayo imekuja pale. Kuna subsidiary ambayo ilikuja pale. Subsidiary ilikuja pale. Cash and cash equivalent ya subsidiary. Unaiona? Kumbe ningenyoroshwa hapo Kumbe ningenyoroshwa hapo kidogo. Cash and cash equivalent ya subsidiary ni ngapi? Somebody, cash and cash equivalent. Right here for the subsidiary. Okay. All right. So in this case here, we have cash and cash equivalent. No, this one we shall be able to deduct it. Kuna mali tukatoa cash. Kuna mali tutaitoa pale juu. Kuna mali tutaitoa pale juu. Hapo correct. You simply pick these the way they are. Pick them the way they are. If it is this 120, I know we shall be able to adjust it. We pick these ones the way they are. Great. Haya, twende kwa financing activities abracadabra. So financing activities abracadabra, always here there are low-hanging fruits. What low-hanging fruits do we have under financing? When they talk of financing activities, what first of all comes to your mind? What comes to your mind? When you talk of financing activities, you guys are finance managers, AFM gurus. When they talk of finance, loan, I like that. Finance cost, I love that. Equity. So basically, we're looking at debt, and equity, yes. Debt and equity. So to answer rahisi, in this case here, give us the loan. So are you able to see the loan, ladies and gentlemen? Is there anybody who is able to see the loan? Is there anybody who is able to see the loans? Anybody who is able to see the loans? Loan notes. Oh, they are not talking to me. And the non-current liabilities, bonds. So bonds. Are you able to see the bonds there? Are you able to see the bonds, abracadabra? So abracadabra, opening minus closing. What do we have there? Opening is how much? If you look at this very well, the bonds, very easy. Bonds. 4,000 minus, in this case here, 4,000 minus 5,500. And then I say times -1. Why am I multiplying this with -1? Oh yeah. Why am I multiplying this with -1? Oh yeah. Why am I multiplying this with -1? Oh yeah. Because it's a liability, yes. Which gives me what here, somebody? 1,500 positive. So if it's positive, it means a cash inflow. So we issued new bonds in the year. But if you're following this concept, you don't have to write that we issued new. No. You simply take it the way it is. That's a free mark. From there, ladies and gentlemen, we shall come here very fast. We shall come here very fast and talk about what here. We said it's debt and equity. Debt and equity. Debt and equity. So in this case here, equity component, we have share capital, and a share premium. You combine them. And a share premium. Share capital and a share premium. Share capital and a share premium. So that account is very, very useful. Share capital and a share premium. I would want to see how you guys are handling that. In all liabilities, Ellen, yes. In all liabilities, yes. Share capital and a share premium hii usumbua wanafunzi sana. Kuna kitu hapo ukishika, woi umeshashika kila kitu. Umeshashika kila kitu. Kuna kitu hapo ambao ukishika hiyo share capital, you will never go wrong. Never. That one you will always get it correct. Combine those two accounts, and then I expect you guys to give me an answer. You will never go wrong. Once you understand here, never ever, only free of charge. So according to Ingugi, the amount you should book under share capital, is 3,000. New issue of 3,000. Wow. Also Honorable Nick. And by the way, there is a student I never gave a present yesterday when I checked answers later. Nilikuwa naangalia different WhatsApp groups. Mwanafunzi sikupatia zawadi yake jana. I'm really sorry. I think yesterday I was very tired. Meru is very far away. Mimi nilifanya makosa nikaenda njia na nyuki. Ilikuwa mbali sana. No. It was this lady called, I think, Nimuli, some lady. She actually got two presents. Not unless Honorable Nick, you would want to assist her in eating that money. 3,000. The grace says 3,000. Not many guys can get this. Not many people can get this for sure. Not many people can get this for sure. Because the answer is 1,000. The answer is 1,000. Is there anybody who's getting 1,000? The answer is 1,000. Wow, Vero. Lakini haiko na zawadi, Vero. Haiko na zawadi. Veronica. Great. These are what you must. Remember, I use those presents to at least ensure that you guys try, put in efforts to understand. But you God, you must. We'll never take this thing very serious. Come and work in a jana. Hata ana home. Kalisa like kosa zawadi. Don't take that thing very seriously. I put obligation on my side. If there is an obligation on my side, then I should book a liability. Now, for that one, you must always do a T account. This is the only one that you do a T account. Share capital and a premium. The only one. The only one. You do a T account. The only one you do a T account. The only one you do a T account. The only one you do a T account. So remember, it's a liability account. So balance brought down will come here. And you combine. So balance brought down comes there. Balance brought down comes there. You combine like that. So then we have, ladies and gentlemen, what we have here in the T account of RRS. I can see share capital 4,000, and I can see share premium 1250. So please add for me. Inakuja ngapi? Abracadabra in 5250. That's balance down. After gonna balance carried down. Balance carried down. So balance carried down is how much? Balance carried down is how much? Balance carried down is how much? Balance carried down, I can see ordinary 6,000. I can see in this case here share premium 2250. That's my camera. Hii lazima ufanye ka working kidogo. So please chora your T account, and once you draw it nicely, please put your thumbs up like this live. Put your thumbs up, come you are able to follow. I've taken the share premium and share capital and added them. Opening balance I've added. 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 Great. Yeah. So even examiner napenda kutesa wanafunzi sana. Remember, we issued new share capital. 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 New share capital yangapi? Ukiangalia when you were acquiring this new subsidiary, note number 1, during the year ended 30th September 2021, Eurogroup acquired an 80% equity interest in Sport Limited, a local subsidiary quoted in the Securities Exchange. The purchase consideration on acquisition comprised a share exchange of shillings 2,000 million and a cash consideration of 500. Cash consideration of 500. So in this case here, remember from this particular word called the pairs. The one that I taught you, those guys that I taught financial accounting in section 1. Financial accounting section 1, I told you share capital is here. These 3, revenue, liability, share capital. Whenever they increase, you credit. So share capital has increased, we shall credit here. So in this case here, we have increase in share capital, increase in share capital of how much here, somebody? Of 2,000 like that. Increase of share capital of 2,000. So this one, you guys never give me a figure. It's supposed to be 8250 like that. So then any difference automatically means what here? Means that we got money. Any difference means that we got money. So is there somebody who can give me this balancing figure? Is there somebody? Remember this one here, we never got money out of this. This one here, we issued those shares. I recap, okay? We issued these shares and got a subsidiary, but not money. We got a subsidiary, this 2,000, not money. We never got money. So in this case, ladies and gentlemen, then we have here bank. So we have here bank, 1,000. Bank 1,000. So please tell me this bank amount. The bank amount, is it positive or negative? Is it a cash inflow or a cash outflow? Is it cash inflow or a cash outflow? Because when I create here, I'm debiting bank. It's a plus, isn't it? So when you go to where you have your share capital and share premium, please write 1,000 positive. Write 1,000 positive. So before I recap, it means you guys kuna video moja muku watch. Because there is a place nimesema kwa video, share capital, share premium account, you must always do a T account. And you must always ensure that if there were shares that were issued out to, right? If there were shares that were issued out to acquire a new subsidiary, you must always credit that amount. Nakitaka uja watch video, I believe now kama ni mwanafunzi wa kushika vitu last minute, umeishika kiasi. Haita kuchanganya sana. Hata kuchanganya, so what? Do you know so far you are above 20 marks? Now we are talking of 26 out of 20, perhaps, if there are more than 13 ticks. So hata sitastuka sana. Sitastuka sana. So before I do a recap of that pairs, are we now a little bit, we can never be 100%. Just like when you go to a doctor who tells you that, hey, because of this disease, I need to inject you. I need to inject you. It can never be really, even if it's for curing some disease there, it can never be really comfortable. Injections, getting wires in your body. Getting wires in your body has never been fun. Okay, I can see what Amos is saying there. I can see what Amos is saying there. Few minutes, that's what I want. Few minutes, that's what I want. Now, Amos, remember, Amos, where you are an expert of financial consolidation. You're an expert of this financial consolidation. The parent company will not recognize that share capital in its books. Right? Not recognize that share capital in its books. Where's a cram namna hii Amos? Cram hii kwa sawa ya Amos. Lazima ukuje uweke hapa. Sasa hata kuna explanation mingi sana. Ladies and gentlemen, in the interest of this lady wants me to recap. These pairs, I'll not recap. I'll not talk about so much of this. I'll not talk about so much of this, ladies and gentlemen. Why? Because you passed very well. You are at section 1. There is nobody who failed financial accounting here. You failed not be here. Anyway, when we talk of pairs, just a quick high-level overview. These are purchases, expenses, assets. You debit. Purchases, expenses, assets. If I buy a motor vehicle today, I will debit motor vehicles. Revenues, liabilities, share capital, you credit. But it does not go a lot into this. Share capital is the only one that I'm using, and share capital, when it's increased, I credited. Ladies and gentlemen, from there, the only working that I will do is the working of goodwill, because I need goodwill, and that's a free, it's an easy. So is there somebody who can give me the goodwill here? Goodwill here. Let me see whether there is anybody who is able to give me goodwill. That is the only other working that I'll do. That is the only other working that I'll do. That is the only other working that I will do. Goodwill. Let me give you 3 minutes. Let me give you 3 minutes. Let me give you 3 minutes. Great. Great. Okay. Piecemeal. Most of you are talking about proportionate method. So then goodwill, what do we do? If it's proportionate methods, not there's full method and then there's proportionate. So you're using proportionate method. So proportionate method, ladies and gentlemen, we are taking here purchase consideration, parents consideration, parents consideration, how much? You can see the parent gave out shares worth 2,000, and it also gave cash worth how much? In note number 1, they gave, in this case here, they gave, okay, great. And I would want to see whether you guys are very comfortable. Munasikia sauti ya masufuria kidogo kidogo background. Unajua mzee anatengenezewa chai. Lakini mnasikia, sikitaka msikio sauti. Mnaisikia? All right. Thank you very much. All right. 2,000 plus, Iskiki, thank you very much. 2,000 plus, 2,000 plus, 2,000 plus. We have from note number 1, there was a cash consideration of 500. So this gives us 2,500. Now, from there, we have NCI's consideration. When they tell you that NCI, look at note number 2. It is the group's policy to measure NCI in subsidiaries at their proportionate share. At their proportionate share. So when they tell you it's the group's policy to measure NCI at their proportionate share, don't bring them here. You simply come and give us the net assets of the sub, So net assets of the sub P. Net assets of the sub P. You can see the note number 1. They gave us total net assets of the subsidiary were 2,500. Net assets of the subsidiary were 2,500, but because it's proportionate method, I will take 80% of this. Are we able to see where 2,500 is? Are we able to see 2,500 as the net assets, fair value of the assets of the subsidiary acquired? Yes, I can see Dennis there already has been able to pick this. Even Abraham, Dennis, you're a good student. It's only that today I don't have money. We are given in that table, we are told the last sentence of note 1, Sporty Limited's net assets at acquisition had the following fair values, and if you add all of them, it is 2,500. And then, of course, if it's proportionate method, you only take the parent share, 80%. So 2,500 times 80% ni ngapi? 2,500 times 80% ni ngapi? Wanasema 2,000 is number of shares. There must be very many shares, eh? Oye, akina wakaka jina shillings 2,000 mbele oye Grace Adoyo. Ama mimi naona mbaya, ama ipas pepe yangu ni mbaya. Wakaka shillings 25 shillings mbele. Grace Adoyo, my friend. Mwana umeka shillings 2,000 mbele. Sawa, at least umeona. Umedunga mingi 2,500. Hakuna wezi shilling, akini multiply na shilling, itakuwa shilling squared. Wewe nitakuitia Museveni akuweke kiboko. Because wamesema share exchange and those shares were worth 2,000. And that's why we took the 2,000 to our balance sheet. 2,000 like that. Okay. So 2,500 times 80% gives me how much? Here, somebody? 2,500 times 80% gives me how much? 2,000. Now 2,000. So you subtract, you get goodwill at acquisition. Goodwill at acquisition is 500. Goodwill at acquisition is 500. It's 500. The other alternative, first of all, finish writing up to here, and then I show you some other alternative. Finish writing up to here, and then I show you some other alternative. Finish writing up to here, and then I show you some other alternative. Once you finish, please put your thumbs up like this. Put your thumbs up like this. If you're brown, use the mzunguze kidole. If you're brown. If you're black, dark and handsome like myself, that is in this case here, a black person's, yes, like Noura's used it very well. Yes. You understand this emoji. You know emoji unaweka tu kidogo. Kama ni mweupe, unawekanga ya mweupe. Kama ni msichana mweusi, unaweka ya msichana mweusi. So ni wasichana ngapi weupe hapa? Martin, I'm so sure Martin, you're not mweupe. Wewe Martin, you're not. Great. We shall overcome. We shall overcome. We shall overcome. Now, the other method that we would have used is this. This is what we should have used as well. So the parent's consideration remains at 2,500. Parent's consideration remains at 2,500. Then you come and add LCI's fair value, which is a percentage of net assets. So in this case here, the net assets are 2,500 over the net assets are of this subsidiary, they are 2,500. You multiply these with the 20%. 2,500. You multiply this with 20%. You multiply this with 20%. By the way, where did I get this 80% from? It's given in note number 1. It's given in note number 1. During the year ended 30th September 2021, Euro Group acquired an 80% equity interest in Sporty. So if we have acquired 80% in Sporty, then NCI must have acquired what percentage? 20. So 20% of 2,500 gives me how much somebody here. 20% of 2,500 gives me what amount there. Now they're not even talking to me, these guys. Gives me 500. So then you come and add the two, which gives me 3,000. And then now you come and less all the assets, less total net assets. Total because now you have accounted for 80% here, and then you have accounted for 20%. So less total net assets, less total net assets, total net assets, total net assets, they are 2,500. So if we do it that way, you'll be able to get that goodwill of 500 at acquisition. Goodwill of 500 at acquisition. Oh, sorry, Vero. Itaanza kuwa na mazoezi Vero, usikajali, very soon. Asante sana. Good thing is texting me that mwalimu. Wewe tunajua kwa miaka yako huwezi kuwa na masufuria ambazo zinalialia. Hizo ni sufuria gani ambazo hazilii? Those are good prayers. We shall overcome. All right. So which method do you think is better between the two? Which method is better between the two methods? Method 1 or method 2? Method 1 or method 2? Which method is better between the two? Method 1 is always better. Method 1 any day, yes. Method 1 any day. Now, why they are Goodwill? Because this is a free mark concept, which will help me get the impairment of goodwill. Impairment of goodwill. So is there somebody who can calculate now the impairment of goodwill? Is there anybody who is able to calculate impairment of goodwill? Impairment of goodwill. Anybody who is able to calculate impairment of goodwill? You know, it was, sorry, Ellen, it was full method. Full method. Ile ambayo umepatiwa fair value of NCI. What was fair value of NCI? Full method. Great. So is there anybody who can now calculate impairment of goodwill? Impairment of goodwill. Impairment of goodwill. It's very easy. The easiest of them all. Go to your balance sheet. Pick the opening, you say closing, plus, in this case here, our new goodwill, which you calculated, plus goodwill acquired in the period. Equal to, haina maneno, yani kwa mero nasema utemanto. Hakuna mambo. So opening goodwill ni ngapi? Please go to your balance sheet. Opening goodwill ni ngapi? 1,800. How about closing goodwill? 2,175. How about goodwill acquired in the year? 500. Goodwill acquired in the year is 500. So then this one will give you what figure at the end of the day. Anakuja na add na yala para subtract. Atakosea chukua tukakita sema 1,800 minus this plus this. What are we getting at the end of the day? 100. Do you know where you're supposed to take this figure? Is there somebody who knows where they are supposed to take that figure? Kwa P&L sum wewe. Kuna pale kwa operating activities, kuna impairment, wanaeka impairment of goodwill. Impairment of goodwill. Kuna pale umeandika pale dial, ile I. So wanaeka impairment of goodwill, unaeka your amount up 125. 125. 125, 125, 125, 125. So then what are we learning as I disappear now? What are we learning? What are we learning? What have we learned? What have we learned today? The most important thing that we have learned today, Nigani. Actually, I'm going to black. Actually, black isn't good. Grace, what have we learned today? Or would you want us to animate you, Grace, you talk to us? Where do we make use of impairment of note 2? Very, very many places. Share capital and the premium account. Abraham, great. Let me tell you what I've learned today. Let me tell you what I've learned today. Let me tell you, don't write anything. Don't write anything. Now I'm talking, don't write anything. Let me tell you what I've learned. Because I also learn things as we. No. Ellen, you're not writing anything. I'm the one now who is telling you what I've learned today. No. They're typing and I've told them not to type. Don't say anything there. I tell you what I've learned today. I'll tell you what I've learned today. What I've learned today, ladies and gentlemen, in terms of advanced financial reporting, is that I can pass without ever balancing nothing. That accuracy is a very costly thing. For those students in this case who have ever done this far and now they are repeating, most of them, they're not stupid. Trust you me. It's because they never knew how to manage time in the exams. So you get this kind of a question like Abraham, that's why I'm trying to run away from your question. Like, how do I make use of these particular evaluations? That is perfection. And the perfection, it means that, like, I'm a fast teacher, very fast teacher. You can imagine in this case, it has taken me more than 1 hour to do this, to reach here. Actually, not very many of you. You know, you are self. You're required to do everything that Mwalimu has done in how many minutes? In 37 minutes. If you take like an hour, honestly, very bad to say this, if you take 1 hour in any question, I will most certainly teach you next semester. I can guarantee you that. But if you adopt this thing of 37 to 40 minutes per question, then automatically next semester you will be in a different level, PDA. And that is my wish. Never ever go for anything that is called water perfection. I've even seen, you will get even some teachers in this case are taking this kind of a question trying to perfect. Like you get even a teacher teaching one question in 3 sessions. Why? I mean, it was not to be taken like that. This thing is about, and that's why you will hear so many students telling you that I went to Aura's class, low-hanging fruits class, 2 weeks only and I passed. It's because of what are these secrets? Opening minus closing, other adjustments there. Opening minus closing, you move on. 40 minutes, you're done. If you're to be very honest as I close, anybody who failed last semester's exam, I'm so sure group consolidation, you must have done it in 1.5 hours. By the time the examiner was saying, hey, 30 minutes left or whatever number of minutes left, I'm so sure your hair stood up and everybody even in that exam room could see your hair standing up, literally live like that, simply because you never knew how to manage. If you knew how to manage your time, once in this case here, ladies and gentlemen, the examiner says 30 minutes remaining, you actually raise your head up towards the examiner and smile back because you know that you've done it. So it's about what here? Time management. Cash flow. Yes, that is the thing. Like now we are aware, whether you like it or not, cash flow has to be there in this exam, whether you like it or not. So the only secret is that we must be good in these shortcuts, And of course, never go to this exam having like one way of thinking. I'm so sure this is quite bad and somebody may think that Mwalimu is devilish. I'm never devilish, I pray quite a lot. All right. When you go to an exam, ladies and gentlemen, again, from my years of invigilation, from my many years of invigilation, I normally sympathize or especially sympathize with men of my age. Yeah, men of my age. Guys in this case here who are 43, 44, 45, and even 50 years. I don't know for whatever reason, in this particular age bracket, there is a lot of panicking. I don't know whether this is the age bracket where anxiety builds up so much. And hey, if you're then of my age or somebody who has a bit of anxiety, if you're very anxious in whatever you do, that you must start, in this case, you're sweating an exam, ladies and gentlemen, I advise you for free. Please, when you go to this exam, never ever have it like you have to pass. There is nothing that is a must in this world. There is nothing that is a must in this world. In this world here, we are always told to have options. It is either I pass or I fail. And if I fail, so what? If I fail, so what? I mean, you must have a very thick skin. This thing, I'm very tired. Every time, those days when I used to invigilate, every time I could go, in this case, especially the guys who sit at the front, and again, KASNEB, I wish KASNEB would know, people are of my age, they should never be put like to sit at the front. No, those guys should be given a chance of sitting wherever they want, because they want to hide a bit. So when you put them here, umeweka hapa mbele, unampatia karatasi ya AFM, sio kama ni kalamu ni harufu, inaanzanga na makalamu. Na unabeba kalamu mingi kwenda kwa exam watu. Hata sijui kwa shida gani. Makalamu zinaanguka zote kungulu pa. I'm normally very very humble na mwokotea zote na mwekea hapa. Mwekea hapa hata kabla uzunguke kwenda kuangalia wengine. Kakileta yake chini. When you look at this guy, ndio na sweat hapa kwa dhidhi. Kikuleta dhidhi forehead. So at times I even call them outside to cancel them. That's when I tell them, hey, you guys, kwani kwa mtu amekwambia, ni bibi amekwambia lazima upite, maana amekwambia, ama ni watoto, who is really pressurizing you like this? Because at that stage, then you will not be able to pass. Because this AFM, AFR, advanced level papers, they want you to be having some extraordinary calmness for you to pass. You must really be very calm and very happy from inside for you to be able to see things that are easy. Otherwise, if you go to an exam saying that I must pass, I failed this thing 5 times, now the 6th time now I've been taught by Dr. Aura, I must pass. Then you go there, you get a bad exam like myself, I'll ensure that question number 1 is undoable. Question number 2 is undoable. I give you a cash flow, like now this cash flow has got even a section with pension obligations. If you get a student who doesn't know that some of those notes we're putting there to waste your time, somebody in this case starts working on those pension obligations, they end up wasting a lot of time. So once they realize that question 1 inasoma kama home science, question 2 akisoma inakuja kama geography na physics, imechangana na kuumba, now this guy starts sweating. I'm not being, in this case, ladies and gentlemen, sarcastic, but honestly, when somebody is sweating profusely from wrong places, do you think that guy really will be able to think properly in a way that they will be able to pass? I could be unfair, but let's discuss this. This is very important. Let's discuss this. Do you think that guy can pass? You cannot pass. 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 You cannot pass.